Hi, in this video we want to talk about the funding environment in 2023. We had two stellar years in 21 and 22 and things have changed slightly. I think we're all seeing it. We're seeing more anecdotal evidence on Twitter and LinkedIn with startups announcing that they're going bankrupt, shutting down their operations. We're also probably all aware that interest rates have gone up like crazy globally. Inflation seems to be a persistent problem. So we need to ask ourselves, what does that mean for startup funding and for startup funding? And I mean, on top of that, we're also seeing major fuck ups in these startup ecosystems, such as Silicon Valley Bank. We saw FTX, and that still is playing out. We saw blockchain, Celsius, many things, especially in Web3, as the funding environment is kind of tightening up a little bit. The great thing, in my opinion, is that it's not as bad as it seems, and I want to have a look at a little bit of data in just a few seconds. Before we go there, my name is Raphael, founder and CEO of Zendog Labs. We help startups grow across product market fit, go-to-market, and venture capital. Enough about myself, though. Let's pull up one slide that I want to have a look at with you, taken from Crunchbase and the Financial Times, two excellent sources of data, sort of asking the question whether startups are facing a capital crisis. And I think when you look at this chart, what you're clearly seeing is that the investment activity since 2021 and 22 has come down quite dramatically in 23. I think that's particularly evident in late stage and private equity. Volume-wise, we're seeing the biggest receding in investing activity in that segment, which explains why many Series B, C startups are struggling. Frankly, this is the same on the public markets. How many months have gone by since you have last heard about a SPAC going public or a SPAC de-SPACing, whatever language you want to use? It's been some time. So later stage is struggling. But what you're also seeing, I think, is that the earlier stages and angel haven't gone back as much. And I think that is still pretty robust. And that's also what I'm seeing. So if you're a Series B, if you're a Series C company, you may need to talk with your board about what your fundraising strategy is and take that pretty seriously. One challenge that probably is going to hit you at this point and probably already has is that 21 and 22, because they were so generous funding environments, we saw many startups raising at very inflated valuations that they cannot possibly grow into. We saw that revenue multiples for revenue generating businesses were somewhere at 100x and more. Right now, based on what I can see, they're more between 5 to 20, with the sweet spot probably being somewhere between 10 to 15. I wouldn't go too high. I wouldn't obviously go too low. So there's definitely a little bit of a dip for late stage, but other than that, I think it's healthy. And I think here is another one that's very, very important to recognize. And I'll just try to move this line here a little bit as I do this video here. And once you plug this red line or pink line, whatever the color effectively is, onto this chart, what you're seeing is that 23 is actually turning out to be a pretty good year if you're forgetting about 21 and 22 and just look at 2020 and earlier, right? We're higher than 16, 17, and 18 right now. That's pretty interesting to me. So essentially, there seems to be somewhat of a baseline once you extend your time horizon. I think it's dangerous to just look at the short term and start to panic. We want to think about big picture here, which is what startups are all about. And so it's not just that earlier stage and angel is robust in terms of funding and activity. We're also seeing that we're back to a healthy baseline, which we may not just be used to anymore after 2 crazy years. But I personally, I don't know how you feel. I'm kind of happy that we're out of the pandemic, that we're back to real life. And that's what I think we're seeing here. Now, what do you do with this information, right? If you're a late stage business or an early stage business, it doesn't really matter. Go out there, deal with the change in the environment, talk to investors, accept that this is going to stay the same for the foreseeable future. I don't know how you think about it, but I don't think that interest rates are going to come down massively anytime soon. Inflation seems to persist too. If these two variables are going to change, then maybe we're going to see somewhat of a more generous funding environment again. But right now, it doesn't seem like that for the next 1 to 2 years. And that's usually all the runway most startups have, right? So you've got to go out and talk to people. At the same time, I wouldn't try to play the system. What I see many startups that I work with trying to do, and I tactically advise against it in most cases, is that they're saying, hey, let me burn a little bit more runway for one, the environment to change so that I may be able to get higher valuations once I go out and raise again. And two, for me to achieve more progress that I can then demonstrate to investors and that would justify a higher valuation. In general, I like the second point. I totally dislike the first one. The second point is okay, but in both cases, the challenge that you're going to run into is that by the time you're out, you have a very short runway on your hands. that may be too short for you to have a realistic shot at raising capital, and that's unnecessary risk to take. In the current funding environment, but I think it's always the best practice, I would expect that fundraising is going to take up to 6 months. Do not expect that it's going to take a month. Definitely not expect that it's going to 2 weeks. There are always miracles, but that's just going to put you in a very, very tricky negotiation position. If you have to tell an investor, hey, I'm running out of cash tomorrow, I need the money in cash right now, otherwise I can't pay my employees and my bills, right? So don't wait too long. Don't try to trick the system. Deal with the system, and that the environment has changed. It's not going to go back to what it was before, I think. Next one is on valuations, right? I think that the challenge, especially in late stage, I talked about it earlier, that we're seeing is that valuations were inflated as a function of high revenue multiples, which are most likely, although I don't think there is statistical evidence to support that, which are most likely related to PE ratios in public markets, so price to earnings ratios. They have come down, and so your valuation won't be as high as in the last 2 years. And I think that's also important to consider from a fundraising strategy perspective. You do not want to raise at an inflated valuation that doesn't let you sleep at night. Because if you don't grow into it, down round, the board may fire you, the cap table may be completely wiped out, and then you're in a tricky position. So don't push the valuations too hard. Do something that you can realistically grow into within the new funding environment. And then lastly, I think right now is a great time for any fundamentals-based investing as early as startup stage. Definitely in public markets, but also in startup stage. If you can demonstrate real business progress, real traction, real metrics with regard to adoption and activation and retention of your product, all of that is really good juice, and definitely put it into your deck and be loud about it. I think it's proud to be it's good to be proud about fundamentals. And right now, that's what many investors are paying attention to. Fantastic. That wraps it up for today. I hope you found this useful. If you have any questions, drop a comment in the section below. I'll get back to you. Leave a thumbs up if you enjoyed it, so that I have a little bit of a feedback loop in terms of what you guys are enjoying and what you're disliking. And if this is helpful, would love you to subscribe to the channel. It helps me a lot as a content creator and gives me that energy boost to keep going. All right. Talk to you soon. Bye-bye.